You're tuned in to The Real Deal on Real Estate, the podcast that connects investors to deals and partners to opportunities. I'm Kevin Bratch. Whether you're buying, building, lending, or flipping, we've got something here for you. Let's go. All right. Well, welcome to an episode of The Real Deal on Real Estate podcast show. And in today's episode, we're going through some questions that you guys have submitted in one of our favorite new segment. It's called Ask the Deal Guy. So I'm going to be going through some of your guys' questions that you submitted, and we'll kind of answer things and see how things go here. So again, this is going to be some exciting questions that you guys have submitted, looking for some answers, and I'll try my best here to give you some fantastic answers based on your questions. So jumping in. Let's go. So right now we got the first question is, what's the best way for an investor to approach a realtor about joint venturing on off-market deals? Now, how can you approach realtors to joint venture on off-market deals? Okay, well, there's a bunch of different ways you can do that. One of the ways is a lot of realtors have access to off-market deals, and what they do is basically they know a lot of homeowners that are either prepping their homes to get ready to be listed and sold. They know people that are looking to eventually sell, so they're preparing their homes and things like that. And those are potential off-market deals, because if you talk to a realtor and you're like, hey, we could potentially pick up this property that you have a client that's looking to sell. We're interested in looking to buy in that particular area. So rather than taking it to market and having them list a home, why don't you show us the property prior to listing it, and we could possibly pick it up prior to having that done. So that's how you can kind of find some off-market deals with some realtors. And a lot of them do know some homeowners that are prepping their homes, doing some renos. Again, from a realtor's perspective, they need the property in the best condition possible when they take it to market, because the better the condition, the more likely it can sell quickly and the top dollar they can fetch. So they are telling their clientele to prep their homes, get it ready so that it'll be prepared and ready to go for sale. So one of the great ways to do that is to talk to them and see what they have in their inventory, in their pipeline of what might be coming up for sale. And they could potentially point you in a direction of something that will be a great deal rather than it going to market. And also, you know, they can always help you with like contracts and things like that. So it's always good to have some realtors that you're working with that that have some things in place so they can advise you accordingly. And there's a bunch of different ways that you could work with these types of agents and just find some that fit your type of criteria. Some of them do not have much access to investment property. So you want to be dealing with the right type of real estate agent and clientele so you can find these types of opportunities. Okay, so let's jump into the next question. So how do you spot a foreclosure or distressed property that's actually a good deal and not just a money pit? All right, so looking for a distressed property or a foreclosure property investment that isn't a money pit that's actually a good deal. Well, basically, when you're looking at some of these types of properties, what you want to see is, you know, how much work needs to be done. Obviously, pointing out some of these properties, the distress or foreclosures, majority of them need a lot of work. So that's why, you know, they are in that category. So when you're looking at them, you want to see what type of works actually needs to be done. So, you know, some of the major costs that you want to avoid is anything like foundational or like concrete like that type of work, because that can cause some major costs when you're doing some work to them. They do require, you know, a lot of like professionals involved in foundation and concrete and stuff like that. So it can really mess with your, I'd say, profit margins if you don't figure that out ahead of time. And the next big price point is the roof. Like the roof requires a lot of work and can be very costly as well when you're looking at these types of properties. So for example, we had a property that we were purchasing that was in foreclosure and we were buying it. And we had our inspector go through the property and he found just the typical things that needed to be done, some cosmetic stuff, you know, anything major. So when we got the inspection report, we kind of knew what we were going into. But when we started the work on the property after we purchased it, our renovation company went through the property and they found a leak in the roof. And that leak in the roof ended up costing $30,000 because we had to repair almost an entire side portion of the roof and completely get it redone. So not knowing that there's a $30,000 cost coming in from the roof side really kind of screwed up our numbers. Actually, we ended up losing on that property, and all just because we weren't doing our proper due diligence. We did hire an inspector that went through from a good company, but they missed that. Going back, what we do now is once we got the inspector in there, we do always have a renovation construction type individual that goes through there. And even though I've been in construction in my background, there are some things we miss, but two of the major things, like I just discussed right now, you want to be looking at is the roof and the foundation, because those can really hurt your profit margins and really be a massive cost if you do not see them. So I'd say those are probably the two biggest things when you're talking about what a money pit is when it comes down to finding in those distressed and foreclosure properties. So the next question is, what creative financing strategies can investors use right now when the rates are high? And what are some healthy approaches, and how can you finance some of these deals? Well, the great thing is right now, because rates are high, there's a lot of hard money and private money out there that is looking to be lent, and it's at historically low rates, because a lot of these guys aren't able to lend their money out, and they're dropping their rates to compete with other people. And there's not very many people borrowing that type of money. So the great thing is, if you're looking for private money, there are some great ways to borrow that and really find some incredible money at some low margins right now. So you can get some money through some creative ways of borrowing from private, which is a great way. Another creative financing tactic that's really working well right now is vendor take-back mortgages. So there's a lot of homeowners out there right now that are lending money back on their property. So they got a ton of equity in their property, so they'll lend back on it. So there's always some potentially some great deals there where the homeowner is looking to lend some of their equity back in order to be able to sell their property to help finance it. So there's a ton of vendor take-back mortgages, and homeowners are lending their equity back. And there's a lot of different cost-effective ways why they should be doing that as well. Like you can save on taxes and things like that. So there are some incredible deals that way to do that as well. So yeah, so private money and vendor takebacks, there's a lot of different ways you can find some of these incredible deals as well. So the next question is, what's the smartest way to build an off-market lead pipeline without spending a fortune on ads? All right, so the perfect way to kind of start your off-market pipeline to find these types of deals is network with a lot of individuals. So work with realtors, talk to other investors, check out a lot of online communities. A lot of the social media and things like that didn't exist back in the day, and it's a lot of great ways for you to find these types of deals, so it's pretty fantastic. There's a lot of different cold techniques and organic techniques that you can do that would help you out in this field. We spend quite a bit of money on online ads, and a lot of people don't want to be spending that. So if you want to do some organic ways to kind of bring these kind of leads in, there's a bunch of different ways you can do that. And, some great cold tactics are just sending out mailers, driving around looking for distressed properties, overgrown properties, the properties that look neglected and things like that, knocking on their door, sending them a mailer, leaving a door hanger, whatever it may be, trying to get in touch with that homeowner in one way or another is a great way to do that. Contacting them through some public records, whatever it may be. So that's a great way to kind of start looking for these types of deals and finding them out there. So that's a great way to build your pipeline as well. So the next question, and the final question, the fifth question is, what's the number one mistake you see new investors make when working with agents or brokers? I'd say a lot of the mistakes that some people are making out there when they're dealing with an agent or a broker is dealing with either somebody that's brand new that doesn't know very much about real estate investments, or dealing with friends or family. When you're dealing with somebody that's brand new or friends or family, it makes it a little bit difficult when you're looking for these types of deals and you're dealing with somebody that's not necessarily knows exactly how to navigate this type of industry. And a lot of people, especially when it comes to purchasing real estate or whatever it may be, know somebody that's a real estate agent or has somebody that's referred to them, a friend or a family member. And it becomes difficult because if you are dealing with somebody that's your friend or family and things go south, don't go so well, or you get plugged into a property that wasn't a good investment, it can make some really tough situations at these family functions and things like that where, individual loss of money. And it can get kind of tested and make things really awkward. So I'd always suggest finding the professionals that know these types of like niches in the area where you're looking for off-market real estate investments or real estate investment opportunities. There's always individuals that specialize in that. And if you're just looking for, a typical transaction, then maybe dealing with somebody that's friends or family or a newer agent might be all right. But at the same time, there's a lot of risk on that end of things. So it's always good to deal with a professional that knows what they're doing in that arena. That's probably one of the biggest mistakes I see out there is like when individuals are dealing with buying a property or an investment opportunity, they go through someone that they don't know so well, or that's been referred to them, or that is a family or friend member. And when things end up not going the way that they expected, it can get quite difficult, and it doesn't really end really well in many cases. So I'd say that's probably the number one mistake I see a lot of people make when they're dealing with agents and or brokers. So you definitely want to find somebody that's specialized and niched in their industry. Again, this is what we do here in the Northwest. We do a lot of investing out here in Greater Vancouver and the Fraser Valley. So if you're looking for off-market real estate opportunities and things like that, this is something we specialize in. We've been doing it for a long time. I've been in this arena for 20 years, and man, that sounds like a long time, and it has been quite a long time. So I do know the space quite well. But again, if you're looking to reach out with us and partner up with us, you can definitely find out more information at my website, kevinbratch.com. But again, so this was basically a new segment we're starting, and we're going to be doing quite a bit of this. It's called Ask the Deal Guy, where I'm answering questions that have been submitted from you guys, and I'll be answering them. If you're looking to ask your question and want to get your question answered, please go ahead and submit it, and we'll show you exactly where you can do that in the thread, or you can go to my website and find out a way to do that. And I hope this has been informative and interesting to you, and we're going to be providing a lot more details and information that is out there to help you guys succeed in the real estate space. So I hope you guys enjoyed this episode of the Real Deal Real Estate Podcast Show. Again, I'm your host, Kevin Bratch, and this was an episode of Ask the Deal Guy, and I hope you addressed all of the information that you're looking for. Any other questions that you may have, or maybe some more information about what I just talked about, I can definitely get a lot deeper. Thanks a lot. Real estate is my sport, and the real game is played off market. If you're ready to play at that level, apply for access at kevinbratch.com. This has been the Real Deal on Real Estate. Talk soon.